very glad to be here with John Ho today. John and we like to talk about FinTech, and so we have prepared a couple of topics on central bank digital currencies, and we can take a regional view as well. John is based in Singapore, I'm based in Tokyo. With that, John, I'll ask you to introduce yourself briefly, if you don't mind.
Thanks, Norbert. Thanks for having me on this Tokyo FinTech webinar. Glad to be here. As Norbert knows, we've been chatting about FinTech and topics, and we have common interests to talk about today. We want to talk about digital currencies. So before that, just want to explain, obviously, the opinions and things I express are my own. That doesn't necessarily represent the firm that I work with. I know in the audience today, we do have English-speaking audience as well as those that are based in Japan. I used to live there for a number of years. And just a couple of greetings to some of my friends who will be dialing in. Konnichiwa, watashi wa John to moshimasu. Dojo roisuku onegai shimasu. So happy to start the presentation proper. In the context of COVID, policymakers, central banks now are obviously trying to accelerate the POC pilots and plans in terms of enabling a framework to issue central bank digital currency. What is CBDC? CBDC is very different from your cryptocurrencies that are not backed by a central authority. In the context of CBDC, in a nutshell, it is a new form of money issued by a central bank, and it will be taken and will be treated as a legal tender in the country in which it is intended to be used. So then you will ask, so why do you need to experiment with CBDCs? Reduce demand for cash as a trend, as a global trend, to also counteract against the growing usage on cryptocurrencies, because the regulators are concerned that although cryptocurrencies may have its own use cases in other contexts, the central bank monetary policy and their role in monetary policy, financial stability is key. So the CBDC is to counteract and provide a sort of a viable alternative to consumers and citizens that you do have a form of currency that's not just in banknotes, coins, or bank account, but also in your wallet, your e-wallet. They'll also expand the accessibility of a country regulatory currency to the extent that it's used not just internally, but also externally. If you look at CBDCs, it's not a one-size-fits-all. The thing we want to talk about later in the design is there are two main types of CBDCs, obviously, that before I move on to other hybrids, is you have a wholesale and retail. So what do I mean by that? So wholesale are CBDCs that are used for interbank payment and security transactions. So when we talk about retail and general purpose CBDCs, these are CDCs by definition used by the members of the public, typically as a means for payment. Then you have hybrid structures that do have a combination of these two concepts, or concepts that combine both wholesale use as well as retail use. But having said that, one thing to bear in mind that a lot of these CBDCs projects are still in various stages of proof of concepts, piloting. As far as we're aware, there have not been any real cases yet, but some countries are more advanced than others. There are obviously fundamental questions to be considered. For example, why are they considering CBDC? What is the purpose? Is it for retail or is it for wholesale? And what is the problem statement they want to solve? Because it's not a one-size-fits-all approach. Different countries have different pressure points, problems. And then the regulators also look at, in addition to just the benefits, what are the risks? Is there a risk of creating a disintermediation on banks? If people feel more comfortable placing money with the central bank directly, does it mean we still need banks? And what does it mean in terms of banks that want to attract deposits for lending, for financing activities? Does it mean that we'll also crowd out the space where they have competitors now in terms of attract deposits? And in the worst case scenario, when you have a bank run, will people then take the money out from banks and park it with central banks? So these are fundamental considerations that central banks are considering at this stage. Safe to say they are obviously looking at worst case scenario, but it's good that regulators are thinking about the pros and the cons, because the more this data and consideration are factored in, hopefully the design of the CBDC, to the extent that we see light at the end of the day in terms of actual issuance, scenarios in terms of upside and downside are well considered, and with contingency planning that hopes to sort of mitigate any shock to the system. That certainly is being discussed not just at the country level, but also at the international level among key regulators and central banks.
There was a speech by Andrew Bailey, who's governor of the Bank of England at the Brookings Institutions. That was a 9 or 10 page speech, and there were just a few sound bites in there that found compelling because obviously Mr. Bailey is not speaking on behalf of all the central banks, but it represents a view on where we are in terms of central bank digital currency. What the governor is saying, there's a few characteristics of money that are important to keep in mind. And of course, he's got a British pound sterling view. It needs to be a sterling denomination. It needs to be convertible into fiat money at par, and it needs to be convertible on demand. I find this interesting for a number of reasons. To start with, simply because we're moving into a society already when we're moving cashless, that cash is actually at a premium because cash is the only method of payment that's still truly anonymized. There's an abundance of companies that tracking various digital assets, cryptocurrencies, and even some of the privacy coins like Zcash, Monero can be tracked these days. There are interesting cases where people actually pay you a premium if you can give them non-traceable cash, which means you can't have $1 million in sequential numbers. But let's say, for example, the $20, $50 that people spend on buying drugs at the street corner have, for certain and sometimes illicit purposes, a much higher value than the value that's printed on them. Mr. Bailey went on and talked about different innovation vectors, and he mentioned three. So one is crypto assets, and he mentioned Bitcoin, and dismissed it simply as a payment instrument because the volatility in value is too high, in his opinion. The second point is that especially in Europe, you have e-money licenses, and most of the new fintechs actually have an e-money license. They don't have a banking license, and they're big differences in that are probably not necessarily on the consciousness of the general public. If you have an e-money license, well, there are certain criteria. The standards are lower. There's no depositor protection scheme, limited capital and liquidity requirements, and there's no resolution scheme, which means that if a company like Revolut goes belly up, good luck trying to get to your money. While for better or worse, and Lehman was before all these resolution schemes have been put into place, it took for ages for certain claims to be settled and for people to get their money out. Now with what we have, some cases ring fencing and resolution regimes, that's much easier. And then there's this thing called stablecoins, and if you want to simplify it, is CBDCs is nothing else than a government-issued stablecoin. Especially if you look at the US, if you look at some of the stable coins that are going around, like a USDC versus Circle or the Paxos dollar, they actually, and that's the prime reason that they've actually been allowed to grow to this volume that they have today, they have a backdoor. And you can actually see the backdoor. You can look at the code. It's open source code. Your assets can be frozen by government edicts. So if the FBI is after you for some reason, they want to freeze your assets, they can freeze your stable coins there as well. And people always pointing to China, and we want to talk about China DCEP quite a bit. But the fact is that in the Western world, most of the stable coins you have this legal backdoor. Libra always comes up in the discussion, and again here, Bailey's point of view is pretty practical, saying before you come with a basket of currencies, which was the initial design that Libra had, the first step needs to be a single currency stablecoin. Where it becomes interesting again is the jurisdiction. With stablecoin, you can obviously run this from anywhere. You can denominate it in a currency of your choice, and the people, whoever and wherever they are, can use it. That's a problem because regulators today are still based on the nation state. The concept of a nation state border is where the jurisdiction ends, and we already in the traditional capital markets are in a holy mess as far as extraterritorial regimes go. That's not healthy. you can't uninvent the technology. The technology is there. People will continue the development of the technology, and whether it's currencies or it's actually synthetic assets, there are things like a synthetic US dollar out there. They are not backed by anything. So we're not talking about a stable coin that's actually backed by a physical US dollar like Tether would be or Tether claims to be. It is just a construct that says this is a US dollar and you can arbitrage around it. And if the price goes out of whack, people would do the arbitrage transactions to bring it back in line, but it doesn't have anything. And so in the same way you can create a synthetic dollar, you can create a synthetic Apple stock, for example. And even then we'll have to question, how do you regulate this? And so the regulators don't realize how far the technology has come, and the technology just develops faster and faster.
Just to touch on the benefits, earlier mentioned about some of the benefits in terms of improving efficiency, demand for central bank money, financial inclusion, and then also to reduce counterparty risk, because if your counterparty in a central bank digital currency is not like a private entity, a bank, or a service provider, because if you hold a central bank digital currency in an e-wallet, you are facing the directly central bank who's the counterparty. So you remove your, what we call normally your counterparty and risk. Earlier, we did mention that the impact of CBDC, given that it's so novel and new, there are obviously impact on interest rate. What does it mean towards financial intermediation, financial resilience, and also the technology. For a number of you who are involved in this from a tech perspective, it's one thing doing proof of concepts, another thing doing blockchain peer-to-peer, crypto payments. But when we look at the real world of doing CBDCs, it's about connecting the payment rails with the blockchain and also ensuring the issue in terms of performance, speed, scalability, the interoperability, because different blockchain have different using different networks. Then you have risk of cyber attacks, data protection, what data needs to be stored on-chain, what data needs to be stored off-chain. And if a number of you have been involved in crypto exchanges, you know one of the things we have to grapple with is travel rule. So the implications, how do you comply with travel rule, doesn't go away. So you might ask, will the travel rule apply to CBDCs? So that question was bubbling around for a while, but the FATF, which is the body setting the rules globally for AML and KYC standards, just last month published a report that takes the position that while CBDCs are not crypto assets, however, for purposes of AML and KYC, they will be subject to the same KYC and AML standards as if you're transmitting money. So if you look at today, if you go to a bank and transmit money, you probably have to identify who's the sender, who's your beneficiary, and where is it going to. If the amount is of a certain amount, your bank will say, you got to state what is the purpose for which you're making payments. So that standards will equally apply to CBDC. Obviously, FATF are not the national body setting standards, but what they say in global guidance does have persuasive influence on central banks and national bodies, because typically they will adopt those principles and transpose to local laws. The other thing we also look at CBDCs in many countries is what is the legal framework. Like in Japan, I'm aware of, if they want to issue central bank digital currencies, it also require a re-look into the legal system. So there was a survey done last year, or rather a report is on the Bank of Japan public website, where they analyzed the potential merit of issuing CBDCs. And there was a specific paper that looked at the regulatory framework in Japan. In order for this to go live, beyond just other consideration like tax, monetary consideration, just looking at the legal and regulatory framework, that has to come into play as well before it is ready for issuance. Because you need to understand that the digital currencies you hold in your wallet, whether it's in your offline wallet or it is in your hot wallet, needs to be recognized universally as money, as legal tender. So I think that's a key element as well.
Under Japanese law, legal tenders really only Bank of Japan issued banknotes and coins. So as John said, if you actually want to create something digital as a sovereign currency, you need to change regulation around that. That is fundamentally different than maybe some of the cases where in the Caribbean, the argument was that the digital representation that you have is actually just a digital representation of the banknote. You wouldn't be able to make that argument here in Japan.
One of the things we look at from a design perspective in terms of central bank digital currency, this is a pyramid that is very useful in terms of consideration sort of what are the design choices for CBDC. So the way to look at it is on your left-hand column, these are what we call basic consumer needs. And then your right-hand column, these are what we call CBDC designs. So the way the Bank of International Settlements crafted this early this year is to look at, just take for example, for the consumer needs, do you want convenience or do you want cash-like peer-to-peer functionality? Because depending on the questions that you raise and the answers then would dictate the choices that central bank would decide in terms of the architecture. Similarly, do we want resilience and robust operations? Then it's a trade-off. Do we use DLT that's still in its emerging stage in terms of maturity compared to your actual payment rails that are robust, secure, and faster, cheaper right now? Or do we want to invest for the future because technology is moving very fast, that speed, scalability on DLT is obviously improving. Then you look at accessibility. Do you want the CBDC to be accessible to all? If so, what are the considerations? Do you use account or token-based? The problem with token-based, the Bank of Japan have considered in their paper is, what about the rural areas where you don't have electricity? And in Japan, as we note, we do have power outages because of typhoons, because of earthquake. When you hold money in times of difficulty, if you go to a shop or a grocery store, you can pay. But if you're going to have a situation where your money is tied to the fact that you need to have access to Wi-Fi, the question is, what if there are no power outages? Does it mean you can't access money? So there is a concept that's floated around with the Bank of Japan is to ensure what is termed as universal access. It is an offline wallet, meaning that the fact that if you go to a store, they can actually swipe either using a QR code or any other technology, the technology that is developing that you can enable digital payments to be made, even though you don't have access to Wi-Fi. So that is obviously still being explored. So it's key. When you do CBDC, you don't want very definition, exclude people who are less tech savvy, right? Not everyone holds a mobile phone. A lot of people who are beyond a certain age, they will prefer simplicity rather than all kinds of funky gadgets. I think these are very real consideration from policymakers to say, what do we want? And account-based, token-based, we can talk about it later about the China DCEP. As far as I'm aware, the current view of the China DCEP is not largely based on DLT. There is some DLT-backed infrastructure, but it's very much still reliant on your payment rails, your account-based technology as well, which has proven itself. Because if you look at today, when we linked our digital wallet or mobile phone, whether it's an iPhone or Android, it's linked to a payment rails, to a credit card, to a bank account where monies could be deducted. The other thing the central banks are also looking at from a design perspective is it just for domestic payment scheme? What about cross-border? I think if you look at a lot of countries, that developed countries, the domestic payment is very advanced because you do have, we can touch on digital payments. You have challenger banks, you have traditional banks that now offer your app to make payment. But I think the friction lies with cross-border payments, which we all know, it's one, is expensive, two, is slow. Third, it doesn't operate on a 24/7. So these are obviously real situations where a number of central banks are looking at. These are not exhaustive, but this forms the basic trade-off. Do I consider consumer needs? If all the consideration on the left column have to be met, that will also drive the type of CBDC design because it has to meet a resilience, robustness, not just from a tech perspective, ensuring that no one is left out from a financial inclusion perspective. So you could have a lot of high tech, but if most people who are obviously less tech savvy are not able to use it, by its very nature, you're excluding a class of people that you should include. Then we move on in terms of what are the key projects we're talking about. As we speak, 2/3 of the central bank around the world are either thinking or considering some form of proof of concept, pilot projects, or even deals in terms of looking at CBDCs. Some are collaborating on a cross-border basis. Some are doing their own solos. Let me pick up a few examples. In the context of Europe, you have the Banque de France that are looking at wholesale CBDC. They've just trialed a wholesale CBDC in terms of interbank payment to settle a security token in the context of a trial project involving Société Générale and Banque de France, which is the Central Bank of France. So they've proven it works. In the context of Riksbank, e-Krona, they're looking at more in the retail space. They're obviously doing a pilot project as we speak. Now, in Europe, Bank of England have also just concluded its white paper and consult looking at certain CBD designs. in relation to China. So China is something that everyone is watching very closely. China has trialed the e-yuan, they call it, which is their national currency, or e-renminbi, with a number of financial institutions. They have trialed in 4 cities, and they have tested the hypothesis whether payment could be made using your wallet and also for a specific purpose. So they trial in the context of making micropayments. They've trialed it in the context of transportations, in the context of e-commerce. Based on the first phase, the results are pretty encouraging. There are obviously been leaked pictures of UI UX interface of certain banks that are trialing the Central Bank Digital Currencies, how they look like. It's very much similar to some features that we commonly see in WeChat and Alipay. But the difference here is WeChat and Alipay are in a combination of e-money, or you attach your credit card. But here, the difference is you're holding a currency held in the digital form. It's pretty interesting. We feel that, obviously, looking at information that is made public, that China is pretty much advanced. They're already in a trial period. Just about 2 weeks ago, they have expanded their tests beyond 4 cities. They are now looking at Greater Bay Area, Hong Kong, Macau, Beijing. Not only are they expanding in scope, they are also expanding in terms of the number of tests and use cases they have. Obviously, this is a space to watch because it does have the hallmarks of changing how a global payment system works. Now, in the US, there is a project run by a consortium of private sectors looking at digital dollar project. So the digital dollar project is a project being kicked off to look at the merits of issuing a US dollar-based CBDC. The Federal Reserve will make an announcement that they have appointed MIT to work with the Federal Reserve Bank of Boston to work on a test case, a use case in terms of the issuance of digital dollar. So it's pretty interesting that if you look at the speech from Jerome Powell in December, where he was asked as part of FOMC discussion whether US would consider CBDC, he sort of hedged his bet saying, look, we are studying about it. There are no immediate plans for us to do anything, because we are collaborating with other international central banks. Fast forward 8 months, the Fed now is saying there's no immediate plans, but however, we are moving ahead, working with tech vendors, working with institutions of higher learning to now see how does CBDC work in a test environment. So to me, that's a step forward. For the first time, they are now putting words into action. So I think that's critical. Why is critical? As you know, US dollar is still the reserve currency of the world. If you look at cross-border payments, e-commerce, global markets, US still commands a predominant share of global markets and payment system. So that's not going to go away. And one of the sort of objective of having digital dollars is to preserve the use cases in the US dollar world currency status. Because if they do not adapt using CBDCs where the whole world is going digital, the concern would be there will be less attraction to hold the dollars if the world is going towards a digital payment mode rather than just based on banknotes and existing payment rails. Obviously, what I show is a snapshot of a number of projects. As we know, there are many projects being run right now in different stages of maturity. Safe to say that we have not seen a real-life issuance yet doesn't mean that it will not happen. My personal view is not a question of whether there would be a CBDC. The direction of travel is there's likely to be a CBDC in the next 3 to 5 years. The question is what form or shape that you will take. It's not a question of if, it's a question of when.
China fascinating for 2 reasons. One is, and I'll take the Chinese view of what John presented as the US dollar dominance. Obviously, the post-World War II economic environment has been a dollar-denominated one. And if you are a nation state, then you might consider that not necessarily a good thing. Because you're obviously subject to another currency's central bank and monetary policy, you're subject to extraterritoriality, right, as we know, with US sanctions, etc. So if you look at the likes of China, Russia, Iran, then there's national interest in trying to weaken the US dollar position and or create an alternative payment mechanism that doesn't go through the US rails, so it's outside of the US grip. the cross-border payments perspective, clearly the Chinese DCEP rolls into the Belt and Roads Initiative. So once you have it working nationally, there's no reason really the Belt and Road Initiative becomes your economic network as well to actually allow it in a cross-border use and in that way actually replace the US dollar. The second reason I find this interesting for China is that I have an inherent distrust of any statistics that come out of China. China has been pretty consistent in hitting their GDP targets. If you are somewhere in the regions in China, you better make sure that you hit your targets and at least report the targets, because otherwise you might no longer be in your job. So the incentives are not necessarily aligned with the truth. And I see a digital currency also as a mechanism to get a true picture of the real economic activity that's going on in the country. If everything is done digitally and it's on the central bank server as it is planned, then you basically have a real-time view in the economy, which is data that any economist would dream of. The third component around China is, of course, the Alipay, WeChat Pay dominance. We've got Alipay, 53% of the digital payment markets, WeChat Pay, 40%, and the rest is 7% or so. Originally, when these payment mechanisms were created, they were, of course, there to enable the commerce on those platforms. But since 2018, they actually created a new clearance system that runs in parallel to UnionPay, which is the RTGS, or the real-time gross settlement for commercial bank payments in China. The Bank of China has forced the e-money providers onto the central clearing platform. I think that was the first step in reining this in. And the last indication maybe is that I think we're all watching with some interest the pending IPO for Ant Financial, which actually is no longer Ant Financial. It's Ant Group. Seems to be a certain nudge of the government behind this as well to say, actually, we don't want you to be the dominant financial group in China. You can be a tech provider to the financial services industry, but you actually shouldn't be the equivalent of a bank. I think it's scrapping back a bit of this sovereignty from the tech fins.
Thanks, Norbert. And I think earlier we talked about what's the global approach in terms of the CBDCs. If you look at trajectory here, 2017, not many central banks are engaged in terms of looking at CBDC. If you look at 2019, up to 80 central banks globally have now either in some form or shape either considering doing a pilot, but a number of central banks are already well advanced in actual trial. So there are differences in terms of proof of concepts. You can actually write a paper and do a paper proof of concepts. In my view, nothing beats the school of hard knocks, i.e. you need to actually test the pipes. You need to test whether the technology works, because it's one thing looking at, well, it works, but as we all know, especially those of you who are involved in projects and project management, you will find something new, right? You'll probably have, there are certain things you need to address, overcome, and come up with new measures to address it. And I think exactly that's what quite a few progressive central banks are doing. It's not just looking at a very limited environment, they're actually testing in a live environment. Like, for example, the Bank de France, they gave a webinar presentation where they are testing against existing rules, existing technology that exists, and they have actually issued a token that is live, kept in the balance sheet for a short while, and now obviously it's unwound to show that, one, it works in a controlled environment. And I think that's important because until you reach that level of testing, you won't know what sort of glitches that you will face. I think one of the attractions with CBDCs that in some of the test cases we have seen is the concept of programmable money. For example, as Japan, as you know, they've tried many methods to boost the economy. If you have a programmable money that is in your wallet, but if you don't use it, it will be taken away from you or it will evaporate. That would incentivize people to spend as well. So in the past, when they did that with hard currencies, quite a number of people actually keep the money and save it. I'm not trying to make a call whether it's good or bad. I'm just saying that the concept of programmable money does give, hypothetically, central banks the option to drive certain outcome, all right, behavioral outcome. And from a macro level, because there's no live project right now to see the benefit of it, but conceptually, it could drive behavioral finance or how people spend money.
But and so even in the international experiments, obviously MAS in Singapore did transactions with Canada, right? Canadian Central Bank, is it correct?
That's correct. I think they did the Project Jasper and Project Ubin. There are many phases to look at cross-border payments. They also look at using token-based payments and doing a couple of things that we explored. Obviously, atomic swap, where we swap one currency over the other, and how viable it is, and also creating an omnibus payment account where the central banks will settle among each other based on a batch basis. So obviously, these are trial projects that conceptually works, but doing in a scale that enable 24/7 faster, cheaper payment is a different scale completely.
For me, John, this was very enjoyable. As always, enjoy talking to you and learning from you. And
no, likewise. I think it's a learning session. I think quite a number of you who stayed back, I appreciate that. We all are in this space together. And I said there's a lot happening. There's still a lot we don't know. But I think it's important to make sure that we sort of keep each other abreast, because all I can say is that this space is evolving very rapidly now, given that digital transformation, digital currencies, CBDCs form part of a G20 priorities. So imagine you do that. G20 priorities are a group of economies of all the top nations. So if they put that as top agenda, that will mean one thing: there's a lot of focus, there's a lot of collaboration. And thirdly, with COVID, the adoption towards or trend towards digitization and adoption of digital currencies, whether it's CBDCs or regulated types of tokens or some of these sort of unregulated payment tokens, is here to stay. Question where the regulators have in mind is balancing trade-off between innovation as well as consumer protection, and making sure that we have a level playing field for all market players, i.e. same set of rules, same set of regulations, and we don't create what we call regulatory arbitrage.
Wonderful. Thanks again for joining. Thanks, John, for great cooperation, and then see you next time again.
Welcome. Thanks for having me. Thanks, Norbert. Thanks, everyone. Stay back.